Hi, my name is Ander Peng. Welcome to another edition of CMS Forex News. Today is Monday, June 23, 2008. Housing prices in Britain fell 1.2% for the June period compared to May, as sellers realize tight credit conditions are making it increasingly difficult for buyers to find mortgages, thinning the pool of available home buyers on the market. A slide in prices will affect spending and confidence of sellers. The pound fell almost 160 pips from its open against the dollar, snapping a three-day rally. The pair found support near the 1.96 level, matching the area of consolidation from Thursday. The decline in housing prices was the most this year and reiterates to the markets that the housing sector will continue to be a drag on the UK economy. In Japan, sentiment among large companies fell to negative 15.1 for the second quarter, the weakest since the series started to be kept in its current form in 2004. Companies are having a hard time as they face rising costs, and in an environment of slowing growth are unable to raise prices for fear sales will falter. Companies see weaker corporate profits ahead, with manufacturers being the most pessimistic. In addition to the poor fundamental release, Asian stocks were down overnight, which helped boost the dollar against the yen. By the New York Open, the dollar-yen pair had tested the 108 level, a rise of about 90 pips from the Sunday Open. Despite losing to the dollar, the yen managed to gain on the pound and euro as both of those economies put out weaker data. In Germany, the IFO measure of 7,000 German business executives showed deterioration in sentiment, with the business climate index falling to 101.3 for the June period. Both current conditions and future expectations fell as firms see weaker demand and thus expect to hire less in the upcoming months. Also from Germany, preliminary estimates of manufacturing and services PMI fell for June, with manufacturing seeing a steeper decline. The data of the last month and a half has suggested that the German economy is losing the momentum it had had in the first quarter as inflation eats into both firms' and consumers' purchasing power. In the Eurozone as a whole, both services and manufacturing activity fell below the 50 level, separating expansion from contraction for the first time in 5 years. Just as Germany is slowing, the Eurozone is experiencing a slowdown in the second quarter, while the prospect of a July rate hike by the ECB is also looming. The euro weakened against the dollar, falling 150 pips from its open before finding support near the 1.5470 level. This was the level of support throughout much of the last week. There were no U.S. releases to counter the negative data from Germany and the Eurozone. Stocks in Europe regained their footing after a weak start and helped take the euro higher against the Swiss franc. The euro-franc pair rose about 70 pips from its Sunday open and broke above last week's high from Thursday. As mentioned before, though, the euro slid against the yen. Overnight, Germany will post its Consumer Confidence Index, Switzerland releases its UBS Consumption Indicator, and the UK will reveal data on mortgage approvals. Tomorrow morning, the U.S. will post 2 reports on housing prices, a measure of consumer confidence, and the Richmond Fed Index. And that wraps it up for the day in Forex News. Join us again right here at cmsfx.com. Until next time, happy trading.